You are watching Market Watch, the brief overview of the key events from the world of finance. If you're a thrill seeker, then it's time to buy tickets in the front row and take plenty of popcorn. Just look at gold, which has soared by $350 in less than 2 weeks, exceeding the most optimistic forecasts. This is happening ahead of the publication of the U.S. inflation report. Recall that the Consumer Price Index will be published today, which is likely to show year-on-year growth. Given the unexpectedly strong report on the U.S. labor market, confirmation of the inflation forecast will increase the likelihood that the Fed will not cut the rate this year. When it comes to the fact that the Federal Reserve may leave the key interest rate unchanged, the scenario in which something goes wrong is not taken into account. For example, one of the largest U.S. banks will go bankrupt or any other failure in a long chain of events. Also, the risks associated with the rapid growth of all companies that are somehow related to artificial intelligence should not be excluded. The implementation of any of the thousands of negative scenarios can provoke a real panic in the financial markets. Stocks, commodities, and even cryptocurrencies are, if not at their historical highs, then very close to them. Consequently, a significant shock can end in disaster. But let's go back to gold again. Its growth, however, indicates investors' concern about the upcoming publication of inflation data in the United States. The fact that the market is not calm can also be judged by the dynamics of oil trading, which has begun to decline. If investors do not exclude the appearance of obvious problems in the global economy, then aggressive purchases of a commodity asset are not advisable. And another argument in favor of the fact that traders do not expect a rate cut is the US dollar to Japanese yen currency pair. It continues to trade at a historical high, which is conditionally limited by the Bank of Japan. The growth of this pair indicates that investors do not believe in a reduction in the Fed's key interest rate. Traditionally, we conclude with the cryptocurrency market, which is also preparing for today's report. The activity of buyers that was observed on Monday has disappeared somewhere. This is, of course, sarcasm, which can result in a significant increase in trading volatility. If you trade on any of the listed markets, then you should understand that today is the day when absolutely anything can happen. After all, an increase in inflation, especially exceeding the forecast, will be a very bad signal for the cryptocurrency market in the short term. That's all I have. Follow the news carefully and be prepared for all the surprises of the market.